Of capital from household savings to other financial instruments has the RBI governor and the SEBI chairperson worried. Both the regulators spoke at different events today where they shared these concerns. Speaking at a Financial Express event, Governor Shaktikanta Das said slowing deposit growth can create structural liquidity issues. SEBI Chief Madhavi Puri Butch said it's time to consider if household savings are going into speculation instead of capital formation. Speaking at an SBI mutual fund event, SEBI Chief said that the surge in volumes across futures and options is now a macro issue and not just a micro issue of investor safety.
Household and consumers who traditionally leaned on banks for parking or investing their savings are increasingly turning to capital markets and other financial intermediaries. While bank deposits continue to remain dominant as a percentage of financial assets owned by the households, their share has been declining, with households increasingly allocating their savings to mutual funds, insurance funds, and pension funds. To be precise, households are increasingly turning to other avenues for deploying their savings instead of banks.
Micro objective of protecting the individual investor has changed and morphed to thinking about the macro issue of saying, is this what our market is designed to do, to basically facilitate a lot of speculative transactions? Or at a macro level, are we worried that household savings are now going not into capital formation, but into speculative activity? What has changed over the 3 years, the facts that have changed, is it has gone from being a micro issue of an investor to a macro issue of the economy itself.
The worrisome rising trend of more and more retail investors trading in the F&O space is also the reason behind SEBI's latest white paper proposing a new asset class. Remember, the consultation paper wants to create a new product that will fall between mutual funds and portfolio management services, offering retail investors a little more risk than mutual funds, but without being as expensive as PMS.
Every time we introduce something new, it's because we say we recognize that there is a market demand for it. We need to give a good regulated environment to the investor to meet that demand. So it's clear to us the investor wants to take derivative positions. Why are we leaving him without an option to do it through a professional fund manager? So that was one of the factors that drove that consultation.